May 23rd, 2022. That wasn't yesterday. That was yesterday. The IMF at Davos, Switzerland said the world economy is going to hit the biggest financial headwind since World War.
Yeah.
What does that mean? You know what I mean? That's what we want to talk about. But more importantly, what can you do? But in 2022, the gap between rich and poor is now accelerating. It's getting wider than the Grand Canyon. But a lot of the times, the people that are getting poor is simply because they had poor teachers.
Yeah,
you know,
right.
Their parents are poor, or they come from a poor background, or like in my case, they're all school teachers who think even a PhD, that's all you need.
Yeah, and unfortunately too, if they don't see the world the way it really is, they assume that the solution or the solutions that are presented to them by the central planners and the politicians.
Correct.
They just take that at face value, is that, oh, well, the solution for bridging the inequality gap, if you will, is just to tax the rich. We'll just take everything from the rich, and we'll just let the politicians take what they want, and then just give the table scraps to the poor, and somehow that will reduce the wealth gap. But as Margaret Thatcher said, that'll just make everyone equally poor. You know, what we want to do is we want to make the poor and middle class, we want to make them richer.
Correct.
And for whatever reason, well, it's because those people don't have that financial education that you've been talking about for the last 30 or 40
Correct.
years.
You don't get it at school.
Yeah, they assume that the way that you again, bridge that gap is by taking from one group, as though somehow there's like this fixed pie, and we have to realize that in free market capitalism, that pie continues to grow and grow and grow, and that brings up the quality of life for the people at the bottom.
And that's where we're going to the Infinite conference with Kenny.
Yeah.
Because it's infinite.
Yeah.
Money is infinite.
But even that in and of itself is a horrible argument. You just invest in the stock market, your 401k, because what happens is these financial planners, I'm sure you know this, yeah, exactly.
You stole my pension, my 401k.
Yeah, but see, this is very important, because what the game these financial planners play is they only show you charts going back to 1981. And this is when Paul Volcker raised rates. So since then, we've been in a down cycle in interest rates. And you can say the stock market always goes up, right, if interest rates are always going down. But what happens when interest rates start going back up? And usually the cycle is about 30, 40 years. So if you look at charts of the stock market going back to 1927 to 1980 or 81, adjusted for inflation, it was pretty much flat. But see, they don't tell you that.
Right.
They just cherry pick the data.
Of course.
They want to give to you in order for them to collect their fees.
There's something even worse happening. Is the last crash was, let's say, 2008, when the repo market reversed and all this stuff. And most of these financial planners and real estate brokers, all they know is a rising market.
Yeah, that's right.
Since 2008, we've been nothing, and happy days are here again because they kept dropping interest rates. Real estate went up, stock market went up, bond markets went up.
Yeah.
And we were just talking to Ralph Powell, and he said the problem with that is that the bull goes up the stairs.
Yeah.
The bear comes out the window.
Or I've heard the elevator, but yeah, the window. That's a little bit more dramatic, isn't it?
No, but Ralph Powell says when it comes, it's 4 months. Yeah. That's how fast this bear is going to go out the window. So we make most of our money from Kenny. Not most of it, but we get income from 13,000 or 14,000 rental units with no equity in it. It's
right.
Pure debt. And we pay no taxes. And then we invest in oil wells.
Right.
And we don't invest in oil companies, oil wells. And so when Biden took the Keystone XL pipeline, he cut that project. Oil went from $30 a barrel to $130 a barrel. 400% raise in one day. I actually liked Biden for about 20 minutes.
Yeah.
But unfortunately, as you know, George, the problem is higher oil prices cause higher fuel prices and higher food prices, which is going to wipe out the poor and middle class.
Yeah, because they're the people that get disproportionately affected because a higher percentage of their income goes to those things that are going up in price.
And they want to tax the rich, but there's too few rich.
Yeah, well, what they don't... Yeah,
we don't pay taxes anyway.
Yeah, the problem with that argument, I've been hearing that a lot lately. I've been hearing that in Davos. Yeah, we talked about that prior to recording. Is the cure for inflation is not more money. That's usually the cause of inflation or consumer price inflation. The cure for consumer price inflation is more stuff.
Yes, produce more.
You got to produce more stuff.
Yeah, produce more oil. Guess what?
Yeah, so if you're just taxing the people who are producing, that defeats the purpose. That's going to create most likely higher consumer price inflation.
That's what Sarah's complaining about is the baby formula. They got so many regulations they can't produce it here.
Well, yeah,
right?
everybody's blaming this baby formula regulation on supply chain, but that's not actually what's happening. It's over-regulation.
Yeah, right.
So
we just imported how many millions of cases of baby food? The United States, the greatest nation in the world, had to import baby food. Something's wrong.
Yeah.
Well, look at our trade deficit. I mean, we're importing everything. We're consuming so much more than we produce. But we've been doing that for decades.
We can print money to pay for it.
Right, but we can't print food. We can't print energy. And at a certain point, if those countries that we're getting that from say, you know what, we're not going there anymore. We're not playing your game. You know,
isn't that what's happening?
Yeah. So a great example is let's look at China starting to do deals with Saudi Arabia, and I think most likely Russia in yuan. Okay, so what most people just see that and they say, oh, it's kind of the deterioration of the dollar, but no, there's far more to it than that. So before that happened, China would need dollars to buy the food or the commodities, the energy they needed.
The oil.
That's right. So they needed to earn those dollars. So that's why they would export all these items that we buy at Walmart, because they want our dollars so they can go buy the oil. So they're in a very difficult position there. But if they start doing these deals in yuan for oil, now all of a sudden they can print the currency to buy the oil. They don't have to earn it. You see,
smart for them.
But what that means is now the United States doesn't have as much leverage over China as it once did.
Right.
So so China can start gradually. It doesn't happen overnight, but they can start to tell the United States to pound sand. And if we can't get our stuff from China, where are we going to get it? We're not producing it here internally in our domestic economy. So then, where do we get it? We get it somewhere else at a much, much higher price, if we can get it at all.
Well, I'm a macro guy too, but there was a guy named Muammar Gaddafi, and he told the U.S. pound sand also. We're going to sell our oil in dinars, not dollars, and he's disappeared.
Yeah.
I guess you don't mess with the U.S.
Yeah, but I don't know that you can compare Libya to China. It's a different ballgame.
You don't mess with the money. They're playing games with money big time right now.
Well, they're trying to control it. It reminds me of the quote that we were discussing actually the other day from Kissinger. Remember?
What was
that? Who was the main influence on Klaus Schwab, who runs the World Economic Forum in Davos.
I didn't know that.
Yeah, we could tell that story when we get back from break if you want me to. But what his quote was, if you control the food, you control the money. Or excuse me, if you control the food, you control the people. If you control the energy, you control countries. And if you control money, you control the world.
That's right. And that was what Rothschild said. I care not who makes the rule.
Right.
As long as I control the money.
Yeah. And I think that's part of their objective. And we hear them out just explicitly talking about it at Davos this week. That's
real gold. And that's real silver. This is $2,000. That's concentrated money.
Yeah.
And this here is about $35.
Yeah, but more importantly, this has maintained its purchasing power over the last 5,000 years. So you can buy just as much stuff today with this little gold coin as you could have 5,000 years ago. And that's why I invited you to come to our gold mine that we bought for nothing down in Utah. Yeah. But it's because we're taught to think differently, and that's what we teach. And I was saying to you from Portland, and Kim bought her first rental property in Portland by Eastmoreland, and she found religion. She could buy something for nothing. Yeah. In the worst economy ever. Yeah. Interest rates were 9%, and people are crying the blues at 5%. Yeah. And once you understand that's all in your head, and you can adjust the dials in your brain, you'll see a different world. And it's all about that knowledge. Yeah, and so we have Ralph Powell on just now. There is more opportunity today
but people are committing suicide. So today, like I was saying, when I said this all the time, we own oil wells. We don't own oil companies. We don't own stocks. So again, when Biden cut the XL pipeline off, oil went from 30 to 130. Holy mackerel! We're making so much money today. The dangerous thing is people are being wiped out. Inflation's killing them. Food and fuel.
That's right.
That's what scares me.
Yeah. Yeah, and that's the moral of the story, and that's the way these things always play out, is when the central planners try to, or who knows if they're trying to do good, they might be trying to do bad. Going back to Machiavelli, we had that conversation the other day.
Prince.
Yeah, the prince, that's right.
They think differently than we do.
Yeah, but any intervention they have in a free market economy, it's always going to make things worse for the poor and middle class, whether it's through the insidious, invisible tax of inflation, or whether it's just propping up assets that are creating these bubbles where people get completely wiped out, and misallocation of resources and malinvestment. I mean, we've got to understand that central planning, or Marxism, as you always say, this is a very, very slippery slope. This is the road to ruin, or as Jim Rogers says, this is the quick path to the poorhouse. We need to understand that free market capitalism is not perfect, but it's the best system we have to raise this standard of living for the poor and middle class. And the crazy thing is they're trying to use inflation as a reason to tax the rich. And it's just completely perverse, because the way you solve consumer price inflation
produce more.
Is, like we were saying, by producing more stuff. And, if you're taxing all the people that are producing, are we going to have less stuff in the future? Or are we going to have more stuff?
No, as you said, the money just moves.
Yeah.
Right? We move to where we're treated the best.
Yeah.
Well, and as Tom Wheelwright, sorry to interject, but Tom Wheelwright always says, you can't tax the rich, because the rich have
pay taxes
right. They earn their money in assets, so you're only taxing the poor and middle class. So it's a solution that will never work.
And inflation is the worst tax of all.
Yeah.
And it just causes more people. And what Raoul Pell is saying is we're going to shift to UBI, Universal Basic
Totally agree.
Income,
Totally
and MMT,
agree.
which is Marxism.
And I just want your audience to think about this for a moment, because I really want to beat this dead horse, because I think it's important. We are experiencing global consumer price inflation right now. Not just this is a huge, huge problem. A problem that we haven't seen since the 1970s.
The biggest global crisis since World War II.
Yeah, absolutely.
That was just today.
That's right.
Okay, go ahead, keep going.
And their solution is to do what? UBI. Let's give people more money, and let's restrict the supply of goods and services even further by making it harder for the producers to actually produce. So what they're doing, they're trying to sell this to the general public. The way we solve consumer price inflation is by creating more money and producing less stuff. It's the complete opposite. Yeah, we need less money and we need more stuff.
So let me ask this question. When you give people money, does it increase the debt?
Well, it depends on how that money is generated. But
I understand, but somebody's got to pay the piper in there.
Yeah, usually it's going to be produced through the issuance of new debt. So if it's the government issuing new debt for that deficit spending, or if it's a bank issuing new consumer debt, then you've got a debt, you've got a loan to match up with that new money that was created. Yeah.
So is there any money in a credit card?
Is there any money? Yeah, a credit card increases the money supply.
No, but is there any money in it?
Oh, no.
It's debt.
Yeah.
And that's how money is created.
Yeah.
You have to borrow it into existence.
Yeah, that's right.
That was 71. You have to borrow the money, and money is created. That was a fractional reserve system. Fractional reserve system says you put your savings in a bank, let's say $100, the bank can lend out 1,000. 10-to-1 leverage in there.
Yeah, now they don't even need that.
No. And that's
they don't really need reserves at all to lend. They can just create money out of nowhere. And that goes back to the central bank digital currency and them trying to ban cash.
So you were talking about CBDC, central bank digital currency. What does that mean to you, George?
Well, central bank digital currency simply means that we all the average Joes and Janes in society, including the businesses and corporations, now have an account with the central bank. In our case, it would be the Federal Reserve.
But isn't that Marxism, central banking?
It's absolutely 100% central planning. because what happens now is the banking system is in charge of creating most of the new money. Now, it's a little bit different with these deficits and quantitative easing and whatnot, but usually it's the banking system. So if they keep that loan on their balance, if the bank continues to own the loan, they want to lend to someone who's going to pay them back, right?
Really?
So hopefully they're going to lend it for productive purposes, meaning the majority of money that's being created is going to create more goods and services.
Right.
And that's why you don't have the inflation, even though the money supply increases. Now, what happens...
It's called capitalism.
Yeah, and that's why the free market works.
Right.
So, and that's, by the way, why the free market creates deflation.
Right.
Not inflation.
Exactly.
Prices going down.
Capitalism actually brings prices down.
Yeah.
Because you can't compete otherwise.
Yeah, which brings the standard of living for the poor and middle class up.
Yes. But they're teaching Marxism in school. That was my book, Capitalist Manifesto.
Yeah.
That whole thing is so backwards, run by school teachers. Oh, my God.
Yeah, exactly. So if we move into the system with a central bank digital currency, then all the bank accounts go to the Fed. And then the Fed determines who gets the loan and why. And the big key there is the Fed doesn't have a profit and loss. They can lose money. So where a bank has to lend productively, the Fed can lend in a way that isn't productive. They can lend to whomever they want. They don't have to worry about being paid back. So that's centrally controlled money supply, debt creation, and that, to your point, is Marxism.
But it's also massive control. It's Orwell. Big Brother is watching.
Yeah.
They can tell exactly where you're spending your money, what are you spending on, and where is it.
Yeah, so going back to the IMF and this gal that's in charge that was speaking at Davos, she was saying how we need a central bank digital currency and the global governments need to come together. And, of course, the IMF would manage this in the World Economic Forum. But they need to come together to create a solution for cross-border payments. This is how she's selling it, is that all these poor people have to pay Western Union 20% fee or whatever. And she's right, but she doesn't care about that. She just cares about the solution, which is the global governments coming together with this payment system for cross-border that's seamless and free. But, of course, we're using a central bank digital currency, and then the reserve asset becomes the SDR, which is the currency of the IMF. So then they have control over the money supply, and it's not the system we have now with the United States having the global reserve asset or the global reserve currency and the banking system creating that currency globally.
Right. The biggest thing with central bank, I'm not financial. I mean, not crypto smart or anything, but it's Orwell's Big Brother is watching. They can track you, and the reason I like this stuff here, it's real gold. This has been here since the Earth was formed. This is silver, been here the Earth is formed. I can run with this and spend it anywhere in the world. They can't track me.
Yeah.
And so when Bitcoin came out, remember that they were saying, oh, they're going to use it for the drug trade and all that. I said, well, you think dollars aren't?
Yeah, exactly.
Give me a break. I mean, how can people be that stupid and drink the Kool-Aid from the Fed?
Well, not everybody is.
Another thing, too, the thing about, reason we're like macro, is history does repeat. As Jim Rogers says, one thing history teaches you that people don't learn from history.
Yeah.